Right, Trideep Bhattacharya is with us, so let's bring him in. 190 points lower on the index. Trideep, CIO equities at Edelweiss AMC. Trideep, good morning. Good to have you with us here. You know, not underplaying AI at all. And those who've sort of, followed me know that I won't underplay the impact of AI disruption, etc. But it's a historic route, right? The IT index, with a 5% cut today, is down 10 in the last 2 days. And we would be down, I think, some 18% in the last 8 days, today included. Markets overdo things, both optimism and pessimism. You would agree, Trideep, right? So what's your sense here on software stocks to begin with?
So my sense is that AI will clearly transform not only tech, but all other businesses. But markets in the near term are fairly emotional sort of animals from that standpoint. So in that context, we have been we have a technology fund, and where over the last couple of years, the positioning that we have been running is we have about 20-30% overweight on US tech and meaningfully underweight on India tech. So from the perspective of that, we are actually looking to see when this pessimism gets overdone in the near term. I think valuation multiples are coming to a level where AI concerns included, there would still be time to buy these names. In the near term, we could see a bit of a pain, though, in terms of valuation multiples, because they are just about 10-15% below long-term average multiples. So in the near term, can the valuation multiples go a little further south? They can. But if you take a 1 to 2 year view, the stocks sooner than later will get into interesting levels where one could look to sort of nibble in rather than trying to go fresh underweight from here.
But you believe the turning point is 1 to 2 years away? It gets to interesting levels still more than 12 months away.
No, I think Trideep is saying that the business impact is 1 to 2 years away.
Yeah.
I'm just paraphrasing you. But given the pace of the sell-off, stocks can get to interesting levels pretty quickly. Is that what you're saying, Trideep?
That's exactly what I meant. That, generally in the near term, the emotional nature of the markets makes it take down far bigger than what the actual impact is. Right. Likewise, so for example, in the entire last year, India, absent US deal and not being the global favorite, went through a bit of a kind of rough patch. From there, after the signing of the deal, in my opinion, India should have globally do better, and currency should stabilize. So likewise, kind of these are the times when you get interesting levels in markets to sort of put money to work. Having said that, the result season that we saw overall, if you look at in aggregate, hasn't been that bad. The numbers would see a marginal upgrade coming through. This will be the second quarter in a row. I'm talking about Nifty 50 as an aggregate, where you would see some two earnings upgrades coming through. We have the US deal, we have the EU deal all signed in. That should put a bit of a lower lid to the currency. So incrementally for India, in the context of global markets, we are moving in the right direction.
Just one more question, Trideep, on IT, and then we'll talk about the other sectors. So we get a lot of questions, right, that I already hold IT stocks in my portfolio, large caps, mid caps. What should I do with them? Should I continue to hold on, or can I exit now also and then perhaps pivot to other sectors where I could see some more in terms of share returns? What's the advice?
So that's why I said if you have a view of about 1 or 2 years, then certainly this is not the time to exit. If the view is near term, next 1 or 2 months maybe, that's a short-term view. The markets could go either way. I'm not particularly an expert on that. But the valuations overall, sooner than later at this pace, will get to a level where we could get a mid-teens kind of closer to a high teens kind of a multiple, which very few times in history Indian IT has gone to. So it'll be interesting times to look at the sector from a buying perspective, not selling.
Okay, hi Trideep, good morning, good to see you in. What about gold? It was glittering for quite a bit, and some of those gold finances actually did very, very well. And some of the stocks as well have done well, case in point being a Titan. Now the problem is gold has gone up by such a fast clip that sustaining at these levels is going to be interesting. And, because of a bit of a downtick that we have seen in a stock like Muthoot Finance overnight, the stock now is down when the numbers didn't appear that bad. Your view on gold finances and on gold as an asset class?
So I think gold as an asset class or precious metals as an asset class is more, should be part of asset allocation for investors. I think given the rally that we have seen in precious metals, like I said, in IT, sooner than later, it'll get to interesting level to get in. In gold and silver or precious metals, the next trade, maybe over the next few months, is probably to lower down the weightage rather than kind of increase weightage from here. One can't time exactly, but I would say that a lot of optimism in the long-term charts is reflected in the prices already. That doesn't take away the fact that in the near term, both of these can go up. But the next trade is to lighten up rather than kind of load up at current levels, would be the way I would put it.
You said the earnings season was good. Second consecutive quarter of earnings upgrades. What are you buying post the earnings season?
So, what we have bought is what I can say. In the last couple of months, we've increased our weightage in financial services. What we note is one of the things that's happening in the economy is the credit growth is bottoming out. We think the credit growth, which was in around about March, April 24 at about 15 to 20%, came down to about 6 to 7% in September, October last year. And we think it's going back up to roughly about 13 to 15% in the next 6 to 12 months. We have been talking about it for the last couple of months. If you look at one of the leading banks, private sector, public sector banks, which reported in the last few days, they talked about a similar kind of a growth rate that's now a data point in that favor. So when credit growth rebounds overall, the sector as a whole does well. Some parts more better than that of others. So broadly, we have been adding to financials and select pockets within consumers.
Yeah. By the way, we've got the Muthoot management joining us in just a bit. Trideep, Nimesh points out that let's put the stock up. Nimesh is pointing out that the one concern which the street is pointing out that there is, I think there is no tonnage growth, right? Which basically means that you're not putting in more volume of gold to borrow money. I mean, the LTV goes down as prices go up, so you were able to borrow against the same value of gold. But it's not a new thing. We know this, and this has been true, I think, for about 15 months or so, 15, 16 months, maybe more. Any thoughts on this one, the gold finance space?
I think gold and gold-related companies have seen a tremendous amount of value growth-driven growth. And market over the last couple of quarters or even longer have responded to that. And that's the reason the share price has done of some of these gold financiers pretty good. So in that context, even though the numbers of gold financiers were expected to be good and they came quite well, there is a bit of, I would say, profit-taking more than any incremental concern, given how well it has done. And as I said, some of these, we are sort of in markets getting to those levels where the trades are done on one end and the anti-consensus nature kicks in, overall leading to profit-taking. So I would say more of profit-taking rather than any fresh concern from what I'm aware on some of the gold financiers and anything else.
Absolutely. And I think it's an important point that you make. Trideep, are you actively buying, selling? Are you kind of sort of, as many have put it, right, just step back and watching where things settle and fall? With those, of course, with a lot of IT stocks, and we've spoken to a few of them over the last few sessions, have had to, of course, readjust quickly. But otherwise, I mean, beyond that, is it a holding pattern kind of a market? What's your sense?
No, we have been nibbling. It's not. We have added to. When I said we've added to stocks within financials, we think some of the public sector banks, which have sort of come off in the correction overall, we've sort of added onto. We've all added on to select mid-tier private sector banks as well, because we think there could be things turning around there. So within financials, those are the two subsegments that we have added on to. Within consumption, we think that some of the numbers which are on the QSR space, the results that have come about are interestingly positive in the direction. So post the GST reforms, while majority of the impact we saw in autos, we think it's gradually spreading to other areas. We're evaluating that space overall. So those are the two spots where we are kind of, on the hunting ground. The area that we are sort of lightening is somewhere where, within metals where things have been quite well, particularly in the non-ferrous side, is something that we have probably of late taken some profits.
Yeah. Trideep, we'll leave it there. Thank you very much for joining us. It's a good chat. Appreciate your time here on CNBC-TV18 and look forward to speaking to you again.